Good afternoon, everyone. David Paul speaking. It's a quarter past 3 in the UK, just 45 minutes into the American session. On VectorVest, the advice is not to buy any shares today, and that was really good advice. The strength of the American market on the downside, the market's off 200 points and it actually fell like a stone. So very, very good advice on the front page of VectorVest. Nevertheless, there is opportunity, ladies and gentlemen, and I'm looking at a company called Dalata Hotel. It's primarily an Irish-based hotel company that's growing very strongly and got a presence now in the north of England. It's trading at £6.14. VectorVest believes it's worth £8.40, so immediately we can see that it's significantly undervalued. It was up 14 pence yesterday. I see it's off about 8 pence today. Of interest is the relative value, which is a measure of the price appreciation potential in relation to a AAA rated corporate bond over a window of 3 years into the future at 1.6168. That's absolutely excellent. The relative safety on a scale between 0 and 2 measures the safety and the predictability of the earnings, and at 1.32 this is excellent. In VectorVest terms, this would be a worry-free share. The trend, short-term trend at 1.11 means it's rising, and it has a very respectable master indicator VST of 1.36. So currently on a hold recommendation on VectorVest with a stop at 573. We believe it's going to grow earnings at 38% next year, which is quite a clip. Now, if I go to the right-hand side, I can actually see what I call the VectorVest secret weapon. It's called the Comfort Index, and it measures the long-term trend of the share. And at 1.43, this is saying that this share is in the throes of a very strong long-term trend with little volatility. Nothing beats a look at the chart, and the chart looks excellent, folks. There we go. This is a weekly chart, and I think that I have to point out that the share is not that liquid, so that's something for you to look at in relation to the size of any exposure. It's my normal format. Clearly the candlestick chart speaks for itself. The thick green line is the VectorVest valuation, and down below in the window below, the price is earnings per share. And as you can see, as the earnings per share ramped up here, the VectorVest program revalued the share price, and as earnings rose, and as you can see at the moment, this value line moving well away from the share price itself. So we believe it's worth 850 odd. It's trading at 614. Very importantly, it's trading a very nice support line on the upside, and it would seem, ladies and gentlemen, to have pulled back to the last old high. The advice on VectorVest, folks, is not to buy shares at the moment, so I think that Dalata Hotel ticks 2 out of the 3 boxes on VectorVest. First of all, the fundamentals of the company are excellent and getting better. Secondly, the technical position of the company is strong in that it's in the throes of a long-term trend with little volatility, as you can see. And the third thing that needs to come to the party now is that the general market needs to move upwards, and the front page of VectorVest will tell us that. If I go to that front page, when this little pointer pushes into the green, VectorVest will say here, it says VectorVest advocates buying safe undervalued stocks that are rising in price at this time. At the moment, 1 out of the 3 boxes is saying no, and I suggest that we sit and do nothing until we get a green light in the price column of the color guard, and the advice is positive. Doing nothing is much more difficult than anybody would think, but certainly if you're a long old player, there's nothing to do. But this share looks excellent to me for long-term growth. Thank you very much. Bye-bye.